Welcome. I wanted to put together a quick update for you, especially in light of what's happened and how quickly things can change in a very short space of time, or albeit even just a week. And it seems that the Trump bump has very quickly become the Trump slump as chaos and irrationality around government and foreign policy reigns supreme. And Trump's approach to these negotiations or deal making, as it seems, is whether or not he's able to run the world's largest economy like he did his businesses. But I think that the difference this time, obviously, is that typically where these business dealings are negotiated behind closed doors, these are playing out in the cold light of day, and national leaders, which would being replaced rather by what would typically be accountants and lawyers. But it's a very fluid situation, and it's unknown what, like I said, what the economic and geopolitical consequences will be as a fallout from this. But what we do know is that where there is uncertainty, and particularly given the rapid rise in share market performance over the last 12 to 18 months, where uncertainty exists, so does volatility, and markets will sell off or shoot first and ask questions later. And I think that that's what we've seen, particularly in the last week. But I do think Trump will back off a little bit on his tariffs, and I think that it will be impossible for him to maintain the level of intensity that they have in the last little period. As it stands, I think that businesses at the big end of town, particularly in the US, that embraced him for his policies around deregulation and lowering taxes are going to have a very hard time continuing to support him and having the confidence to invest as the economy and the impact of these tariffs starts to slow. Conversely, I think that middle to lower households who voted him as the great savior of making America great again are going to quickly realize that the impact of these tariffs and the effect of them on inflation is going to continue to make the cost of living pretty difficult for quite some time. And especially if economies do stall, corporate profits do start to fall, and share prices leading to an increase in redundancies. Those people in that bracket in America, particularly through middle America, that end up on the dole queue, it'll be interesting to see how they see the great savior if that eventuates. So I do see him backing down a little bit, and I think that ultimately Trump is a watcher of Wall Street, regardless of what he says. I think that he does care, and although he's undoubtedly an antagonist, a market crash or even worse that would taint his legacy and have him referred to in the history books as the cause of the great Trump recession for decades to come would certainly not sit well with him. But I think that the immediate risk, like I said, around this chaos is that it leads to greater uncertainty, consumer confidence falls, snap shut their wallets, stop spending. We see corporates then start to slow down, and that negative feedback loop ensures and accelerates the slowdown or decline in economies that is already commencing at the moment. In terms of markets since the start of the year, like I said, obviously there's been a notable shift from trade policies, central bank actions, and currency fluctuations. Interestingly, central banks that have been so focused on fighting inflation, now that is changing as the focus on tariffs, the impact of immigration, and these and also the resolution or the potential conflict through Europe and the Middle East ensures, I think, that we're going to see rates stay higher for longer, and I think that's being priced into the bond market. So we're seeing yields rise there as investors start to move towards safety and are more mindful of that. But we are seeing, in terms of equities, a rotation out of particularly the US tech stocks towards Chinese and European stocks as they increase their defence spending. And we've been a little bit cautious on valuations, and we've spoken to many of you about that and the impact that's had, particularly with the rise of the Magnificent Seven, and as valuations have been stretched, we've seen here where volatility ensues. They're the first ones that fall pretty heavily. The US dollar, interestingly, is reaching its 5-month lows against the major currencies impacted by these policies. And I think that reflects the waning confidence that people are having in the dollar's safe haven status, and the euro and the yen are appreciating as Europe increases their defence spending and the potential for interest rates rises in their respective regions grows. Back in Australia, we've seen the ASX 200 peak in January at 8,532 points, but we are entering correction territory now, defined by a sell-off or a decline of more than 10%, illustrating that we aren't immune from what's going on around the world, and like I said, that uncertainty that's reflected at the moment. The minerals and mining sector remains very subdued, and our financial heavy index taking a break after a pretty strong 12 to 18 month run. So ultimately, is this the start of a prolonged US downturn? It's quite possible, but it really depends, like I said, on how long the tariffs stay around and what the impact or damage is done along the way, and the scarring on the US economy, which will reverberate around the world. And with Trump, we just have no idea. It's very difficult to get a read, and I think that his first reaction is not ultimately where things lead to, or the other alternative is simply a short-term correction and a buying opportunity. But again, I think at this stage it's a little bit too early to tell. Ultimately, it was expected that we would see some level of volatility this year. I think that's come through a little bit earlier than expected, as I said, the impact of some of these policy announcements takes hold. But either way, I think it's important at this stage to remember that the investing factors of time horizons and diversification and quality of assets, as well as the discipline of remaining focused on the facts and not headlines, is what's going to hold you and your portfolios in good stead at the moment. And we're confident in our portfolio construction that we pay attention to all of those factors, and in particular those in decumulation or pension phase. Our buckets approach to managing your cash flows will help steer you through this. But as always, if you have any questions or you'd like to talk further about any changes in your circumstances, please feel free to get in touch. Otherwise, we look forward to speaking with you again shortly. Thanks very much, and bye for now.